All right, if everyone's settled, I'll start the session. I have to thank you very much for joining us. The agenda of the conference is India to become a $5 trillion economy, but I'm a journalist first. So I have to ask you from where Mr. Kumar left. I asked him, are you buying Yes Bank? He pointed to Mr. Kotak. Then he pointed to Mr. Hinduja. I'm pointing towards you. Why don't we start with Yes Bank, and are you looking at acquiring it?
We are a small bank. We are trying to ensure that we are well protected so that at some stage we can think of buying others. So I think, yes, Mr. Kotak and all are pointing to each other, which basically goes to show that they might be the best suitors rather than us. I'm sure Yes Bank is not liking when they hear all this.
Ravneet is coming by the way in the evening.
So, great. So I'm sure Ravneet will have an answer. Rather than speculating on who's going to buy Yes Bank, I think what is happening in the market is with the merger of these PSBs, the market is going to open up in a different way. So let's see how it pans out. But yes, if Yes Bank is able to raise capital, no problems. If they don't are able to raise capital, then we might have to look forward to some of these banks stepping forward and trying to take on Yes Bank. But that obviously RBI and people like that will decide.
In general, we've talked about the economy and we've talked about the stress. What, to your understanding, is the stress in the financial system? Everybody is blaming it on the IL&FS crisis and the DHFL fallout. But India cannot slow down because of IL&FS crisis and DHFL fallout.
So I think it's a combination of factors. It's not just one factor. In my view, what happened with, let's start with, DeMon and then GST. So you were going after a formalization of the economy, which meant that large parts of the economy or parts of the economy which were working on a certain model, that model was no longer valid, or working on that model became a bit difficult, first step. Then you had the NBFC crisis starting with IL&FS, spread over to Taiwan. That's the second thing which happened. Third thing, you saw that at least at the promoter level, some stress is built up. Then you saw some enforcement agencies coming after some specific promoters in the Indian economy, and then the economy slowed down. And then you also saw that with every bank, the kind of capital which they were able to raise or not able to raise, or when the government was giving them capital and some of the action which was being taken against the, let's call it the bank CEOs or the management teams, the banks also became cautious. So earlier on the risk curve, you had some very cautious institutions, and you had people also, say, on the NBFC side, which were willing to play, on the kind of higher end of the risk curve. So you had an option available, depending on the price which you're willing to pay, that you could raise money. Now, suddenly, you saw a convergence of a lot of these institutions where either they were not able to do business or whoever was able to do business moving on the conservative side. So if everyone is going to become conservative, everyone is going to become cautious, everyone is going to rush to the door when there is even a first sign of trouble, then yes, the credit does tend to drive for the people who really need it at that point in time. So I think a combination of these factors has led to a situation where you are seeing new stresses develop, you are seeing maybe credit offtake has reduced, you have seen the promoters not willing to spend on capital expenditure as much as before, and you have generally seen a change in sentiment. Now, turning this around will take time, but I think changing the sentiment does not require that much. I'm sure the government has taken a lot of steps and they were hoping that the sentiment will change. It hasn't happened as yet, but you are seeing some signs where at least some positive conversations are taking place. So let's see how it pans out, but it's not one factor, it's a combination of things, and I think that's how things tend to play out. Things which are seen as positive or people are willing to ignore, they're not willing to ignore now. And they keep pointing to glass half empty kind of situation. Well, earlier you were willing to look at glass half full and you're very happy with it.
So in your understanding, which part of the economy is about to pick up, which is yet to pick up, and which will never pick up?
Wish we could do that, and the answer was as clear as that. I think if you look at the parts of the economy which are impacted in a big way, or which are being talked about, you have the real estate side, and you have the auto side, and you have, let's say, call it broadly, the consumption side of the economy. I do believe that the consumption side of the economy should pick up, given some of the steps which government has already announced, and what they have kind of hinted at, which could be coming forth in the budget, or etc. As far as the auto side is concerned, I think they realized that the problem which started, more than 12 months back, with the inventory, piling up at the dealers' levels and etc. I think they have sorted it out. They have become quite aggressive with their discounts, with the new models. So I do believe that at some stage the autos might bottom out, and actually you might see a revival in the auto side. You're also seeing some new mines being allocated. So I was talking to a friend from the industry, and he was saying that on the mining side, you're seeing things pick up. My worry is the real estate. Real estate has been a perennial problem. It has been there for a long period of time, especially on the residential side, especially as far as larger, bigger projects are concerned. A lot of developers are in trouble. They are over-leveraged. They have been used to working in a model which necessarily is no longer kosher now. So lending to the real estate industry and reviving the demand and money flowing through the real estate industry will remain some problem over a period of time. Now, government has taken some specific steps, but those steps will take time to implement. The amounts being talked about, will they be good enough to really revive the demand? A question mark. So I would worry about real estate industry a bit longer than some of the others. But the flip side of the same argument on the real estate is that a lot of us are large lenders to individuals who are buying real estate. And there you are not seeing any sign of trouble as yet. The NPLs or the delinquencies remain at low levels. So I think if you have selected your customers in the right way, you are not seeing those signs. But this cannot continue for the longest period of time because real estate is the largest employer. Real estate tends to have this sentiment which impacts both the customers and the business side very, very quickly. It also has a lot of taxes attached to it, so it benefits both the center and the state. So I think reviving that sector would be an important thing to do, and that will, if the real estate sector was to revive, especially on the residential side, I think some of the problems on the NBFC side will also start looking lesser. Because part of the problems on the NBFC side are driven by the kind of exposures they have on the real estate. So it is all intermixed to some extent.
So the out of jail card for Indian economy is that real estate prices have to go higher. What if they don't go higher? I don't want real estate prices to go higher. I'm a home buyer. Nobody wants real estate prices to go higher.
I'm not saying that the prices have to go up. I think the flow has to happen. And that does not mean that you are not a buyer at all. You are a buyer at a certain price, which could mean some discount. But you could be a buyer at some stage. Today you're waiting because maybe you're hoping that the real estate prices will fall further, or you are hoping that maybe it's not the right time to buy, or you just have negative sentiment, etc., etc. So somehow we have to get the flow in the system. If the inventory starts flowing and starts coming down, then automatically it will help the developers, it will help the NBFCs. Now, some of the data which is being quoted is that there is real estate has a $40 billion problem, and 85% of that is in Greater Delhi and Mumbai alone. So it's just a question of getting that flow back so that the real estate players can start investing in projects, finish incomplete projects, and hopefully then the NBFCs also start getting some of the money back, the liquidity back into the system, then the banking system starts opening up. It's not going to happen overnight. It will take time because, it's with bankers especially, we keep drawing a line in the sand. With the line in the sand, we keep allowing it to go further and further from a risk-taking perspective. But when we take a huge loss, we tend to go back and draw the line in the sand again, which is very, very tough. So it will take time for the bankers to certainly start opening their purses in a different way in the very near future. But the flow will help in a big way.
The minute you joined Axis Bank, as journalists, all of us got curious and we said, look, he's come from HDFC Life, he will acquire an insurance company. And we keep on talking about, the name. I know the name. Everybody knows the name Max.
Well, if I read the analyst report, that's the first thing I should have done. I should have gone and acquired an insurance company. And that's what everyone said, that within 3 months of joining, that's what will happen. That has not happened. A couple of things. One is that, the fact that I'm from the insurance industry does not mean that that's the first thing one needs to do. Yes, as a bank, we have an opportunity in front of us, which the bank has talked about for the longest period of time, that we can potentially get an asset in the insurance industry which can add value to our shareholders. And obviously, it is at a price so that it can add value to our shareholders. We are a large distributor, and we should get an advantage of the fact that we are a large distributor of insurance products. But then at the same time, one has to be cognizant of the current RBI guidelines or way of thinking, where they are quite concerned about banks setting up subsidiaries, and especially into businesses like insurance. So on one side, we have opportunities which are available to us, which can add value. But on the other side, our regulator has a very clear view in terms of what they're going to permit us. And we are hoping at some stage in the future, some transaction will emerge where both the objectives can be met. Hasn't happened as yet, and let's see whether it happens in the future. We are not going to do a transaction because that's what the market expects us to do. We have to do a transaction because that's the best thing for the shareholders. So we're waiting for that thing to happen in the future.
In the coming decade, which is like 15 days from now, do you think owning an insurance company will be a part of your core strategy?
See, because you are a distributor, you have two choices before you. That one is you remain a distributor because you don't want to confuse the customer that I am a biased party because I own an insurance company and that's what I want to sell. But they're also at the same time, because you're a very, very large distributor, you have the potential to own a large stake in obviously subject to RBI giving its green signal, you have a potential to own a large stake in an industry which has a long way to go in terms of its potential in the Indian marketplace. So it is a financial services space. India is underinsured. Insurance industry has, potentially will add a lot of value, and there will be a number of companies which will emerge, which will have huge market cap in the next decade or 20 years or so. So if that opportunity comes along, we are of the view that having a large stake is what will add value to our shareholders. And it will give us, hopefully, a leeway in the future that, let's say, if we needed capital, we could use that stake to raise capital rather than diluting ourselves in the bank itself. It creates optionality for you. So why would we not have that optionality rather than giving it up because, that optionality exists. So the thinking of Axis Bank is that, like a lot of other players in the marketplace who are kind of ahead of us, that we should, if we are given the right to play in insurance space, we would like to play. Now what that form and shape would be, we'll see depending on what opportunity comes before us.
I'm going to ask this question to the audience. Anybody who wants to guess what return Axis Bank stock has given in last 20 years? Anybody? Just raise your hand and just speak a number. If I say it's up 50x, will you agree with me? Yeah, some people will. If I say it's 100x, will you agree with me? And if I say it's more than 100x, will you agree with me? 100x is what Axis Bank has given in last 20 years. It cannot happen in next 20 years. But the reason why Axis Bank has managed to give this return is because you were able to create, or predecessors also were able to create, a formidable retail franchise. Now, SBI told us that they are going after retail, retail franchise. Kotak is a retail franchise. If everybody is trying to become a retail bank, who will lend money to the corporates?
So yes, that's the new mantra. Every bank is talking about retail. And the reason we will also talk about retail is because I think we still have got a long way to go in terms of what we as Axis Bank can do in retail. Our market share in terms of deposits is only 4.5%. We are underpenetrated within our existing customers. If you look at our penetration levels and how many customers carry our credit cards, how many customers of ours have taken loans from us, that number is still very, very small. And when we compare ourselves to what the best in class is doing in India, and then you compare yourself to what the best in class is doing in the developed markets, we are a long, long way away. So it is an untapped opportunity for Axis Bank, and there is no reason why we should not go after it, because the returns from the business are quite good, risks are well diversified, and as you very rightly pointed out, my predecessors have done an incredible job in building such an incredible retail franchise. And so we are doubling down on it, we are investing in it, and our belief and desire to grow retail remains very, very strong. Other thing which people seem to be talking about, I'm coming to the corporate side. Other thing which people seem to be talking about is this MSME and SME, and with all the India stack which is being created, and I heard Mr. Kumar talk about the aggregator accounts and all of that. As GST data, IT data, through the aggregator account, the access to data, all that becomes available. I think the ability to lend to some of these sectors will obviously get enhanced in a very meaningful way. You can underwrite better, and that could be another space where people can grow. On the wholesale side, Axis Bank started its life or its journey as a wholesale player. And I have a very strong view that given this crisis which banks are going through, and then the merger of Indian public sector banks, there will be only, let's be fair, 5 to 6 banking players who will emerge, who can actually provide full suite of services to corporates at large corporates. And we would be one of them. So obviously, it does not make sense for us to leave that space and give it to someone else. We work very hard since our when we started as a bank, to actually be able to stand up here today and say that we will be a meaningful wholesale player, providing full suite of services. So yes, maybe the number of players who can have a meaningful role there will reduce, but we will be one of the 6 and 7 players who will definitely be there. And obviously, as is happening in every part of the financial services space, it will be the 5 or 6 players which will get disproportionate share of income through a cycle. And we would like to be one of them. So the number of players might reduce, but the number of players who will be willing to support the corporates will remain with enough capital to be able to support them. Now, what these wholesale players would do is that they would do the large transactions and very quickly turn it around and give to the, I wouldn't call it the marginal players, but let's say the smaller players, and share the risk with them. But we will be right there in front in terms of being able to provide the full suite of services. So for us, it will be an important part of the business, not growing fast enough at this stage, but that time will come. We're very confident.
In the next 5 years, can you be part of the top 3 in terms of profitability in the Indian banking sector?
We are ranked number 5 in terms of market cap. Given our size, given the platform we have, given what we believe we are investing in, given what we believe could be the pitfalls others can run into, the onus is on us to get to that level. The ambition and aspiration definitely is there within Axis Bank's management team and the board to get to the top 3. Now, only time will tell. Depends on execution. But yes, our desire is to be one of the top 3 banks in the Indian banking space in terms of profitability, in terms of market cap, in terms of what our brand and how our brand resonates in the minds of our customers. We want to be a top 3 brand, obviously.
Now, when Amitabh speaks about ambition, he never speaks without plan. What is your plan to become top 3?
Well, we have a plan.
Would you like to share it?
Can't share it here, but what we did was that when I joined, we had a GPS 22 strategy, and out of 800 slides, we shared 3 slides in the marketplace, because that's all we can do. But yes, we have a plan. We have to have a grand plan. We have to have a 5-year vision, and at the same time, a flexibility in that plan to change your ways depending on how the economy is behaving, what the context is, what is the competition doing, and what the possibilities out there are. Some new opportunities might emerge. My only thing I can say is that we had a view of how this will play out and how Axis can go and potentially capitalize on that opportunity. 12 months later, the confidence that yes, we can get there has only increased. The confidence in the platform has only grown. I think we now have a team in place which can take this to a potentially different level. I do believe that the Axis Bank people are aligned to what we're trying to do here. Next 3 to 5 years, it will all depend on how well we execute on all the plans which we have kind of made up on a piece of paper. It's all about day-to-day executing on what we think is possible in the Indian financial services space. Even if we can get most of them right, I think we'll definitely be in the top 3.
You've gone through a painful cycle of NPA recognition. It's been very painful and brutal. That NPA cycle is behind. So apart from anything going wrong in the corporate side or slowdown in India, what could be the biggest risk to your growth? Because what we know, Amitabh, in India, demand is never a problem. That is the demographics. But the good banker is what we've learned today is not only who lends, but who gets the money back. What could be the risk to your growth?
No, that's the principle. If you don't get the money back, there is no money to be made. You're right, the demand is there for the right product, for the selling at the right price. From my perspective, the bigger problem when you think to this from a stress levels or the slippages in the banking system is, when we went through the painful period you talk about, it also in it had a lot of assets which had been building up for the longest period of time. So it was partly a recognition of the problems which have been accumulating by kicking the can down the road. So it sounded much bigger. This time you are seeing elevated stresses. I'm not seeing them go away in a hurry. We have a stock of stressed assets or potential stressed assets. The economy is not helping. Some of the new frauds which have emerged are not helping. Also the fact that every banker is becoming cautious is not helping. So all of us are trying to rush to the same door. And in many cases, promoters just do not have the money. So yes, stresses will remain elevated. But as the government has stepped in very rapidly to ensure that the IBC process works, and we have seen some big resolutions happening just recently, and hopefully more will come. As promoters realize that IBC process might not be the best thing for them, as bankers also realize that they need to work with the promoters. Even if we see elevated stresses and things slip into non-performing loans, my belief is that the slowdown in his economy is pushing a lot of the assets into maybe stressed and then NPL, but you will see the recovery. In the normal course, if the economy would not have gone down, they might have been seen as weak assets, not stressed, and hopefully they would have got paid out or they would have come out of it. Now you'll see them go down before they kind of come up. But the banks generally have become cautious. We have started demanding more from the corporates we lend to in terms of the conditions we attach to the loan. As I said, we have drawn a new line in the sand. So I do not see this stress is going to impact the banking system in a big way. I do expect these stresses to come down in the next 12 to 18 months or so. And hopefully if the economy revives by that time, then things should look much better than what they do today. We are going through a cleansing process across the Indian economy. In that cleansing process, short-term pain is there. All of us have to bear the pain. People who have maybe not managed the risk better will go through more pain. People who have managed the risk, very, very well are not seeing the pain at all.
Okay, just two quick questions. The agenda is $5 trillion. At $3 trillion, we only have one private bank, which is at a market cap of almost $100 billion. Do you think by the time we will reach 5 trillion, it's not a debate of if, it's a debate of when. Do you think at least, if not 2, if not 5, at least 3 banks in India could become $100 billion banks?
Absolutely. I mean, if India has to reach 5 trillion, whenever they reach, India does need a financial services industry which has number of institutions which are large enough and profitable enough to command that kind of valuation. I mean, China is a good example. If you look at China, both in the banking or the insurance space, you have enough companies which are, valued at that level. So why should India not be in that space at all? I'm very, very confident it will happen.
So it's logical to imagine that we will have more $100 billion banks in India.
Absolutely.
Okay. Last question.
Wish comes true, yeah?
And I hope so. So my last question my last question is not to a banker then, it is Amitabh the investor. I've interacted with you in Infosys, in HDFC Life and now Axis Bank. But if Amitabh the investor has to buy one stock, will you buy HDFC Life, Infosys or Axis Bank? Come on, be honest on this one.
Very dangerous answer, but obviously I have to back the institution I'm part of now, which is Axis Bank. The reason I came to Axis Bank, I love Infosys and HDFC Life, please don't get me wrong, but the reason I came to Axis Bank was because I thought it is a platform which can be taken to a different level. And as I said, my confidence has only grown. So for potential from here to where it can go, and what Indian financial services space represents in the overall context of Indian economy, I would say yes, Axis Bank is the stock to bank, but I'm not trying to sell the stock here.
Yeah, you missed on your Citibank stint.
Sorry?
You missed on your Citibank stint.
No, absolutely not.
All right, sir. Really appreciate your time. You've been frank, you've been honest, and really hope that next time when we interact with you, we are at 5 trillion, if not that, closer to that. And thank you for your valuable insights. Thank you very much.
You've been wonderful. Thank you so much, Mr. Chaudhry and Nikunj, for taking us through that insightful discussion. And here's hoping and wishing Axis Bank